Welcome back to CoinDesk Live. I'm Pete Rizzo, editor for CoinDesk. Today, Bitcoin is back at 2019 highs, so we're bringing you interviews with crypto markets experts to break down the hows, whats, and whys. Of course, we're streaming on YouTube. It's youtube.com/CoinDesk and Twitch if you're on that platform. Up now, we have Mark Bhargava, co-founder of Tagomi, an electronic agency brokerage specialized in cryptocurrencies. Welcome, Mark.
Yeah, thanks for having me.
So, breaking down the market here, it sounds like you're obviously well aware of the market recovery.
Sure.
What has that meant for Tagomi specifically in your business?
Yeah, so, for Tagomi, we're a brokerage, so we allow people to buy or sell, can go both sides on the market. Basically our big value add is we hook up to 9 different liquidity sources. So for folks placing larger trades, we break those into pieces, smart route to wherever the price is best, and then go ahead and are able to place those trades across the exchanges or market makers we work with. So, our target demographic is really larger crypto funds, venture funds, index funds, only all accredited investors, larger clients. So good examples are folks like Paradigm or Pantera or Multicoin, CoVentures, Founders Fund, many others, trading through us, doing larger, best execution trades.
So you're not maybe seeing more customers now, but are your customers more active now that the market has returned?
Yeah, so we only launched actually 4 months ago. We're seeing a lot more
Not
customers.
a lot of historical data.
Well, we are seeing a lot more customers. I think what's interesting is people ask us a lot about the institutional angle, because it's generally larger funds, high net worth individuals, index products, and others that use Tagomi. What we've been seeing is not necessarily endowments or wealth managers or huge asset managers moving into the space, but we're certainly seeing the existing players both be more active and be more successful.
So are you cryptocurrency agnostic? You just anything that can be traded on an exchange can be traded with you guys?
Yeah, so it depends on the state and jurisdiction. So here in New York, for example, we have the BIT license, one of the fastest companies to get it, the 18th company to have it overall. So we're limited by what the DFS says we can trade in New York. In other states like California, it's certainly different. We're operational in over 20 states, have MTLs in places like Texas. And then there's also an international question. So we operate in London, have an office there. We operate in Hong Kong, have an office there. And so really what you can trade on our platform is dictated more legal and regulatory. But the 9 liquidity sources we hook up to have 100 plus tokens, so certainly it's quite a large selection. And so for many of the more illiquid tokens, what we do is really valuable because you're combining liquidity pools, you're using multiple exchanges, and you see a lot of price differentials. So we also route to wherever the best pricing is and give you algos like TWAPs, which allow you to place trades over time. So the product is really dedicated to folks who are looking for best execution, more liquidity, better smart routing, better algos. It's really taking all these tools that 80 to 90% of the stock market or FX market uses and bringing them to crypto where you're still Skyping or Telegramming a lot of times to place a trade.
So we're both professionals in the cryptocurrency industry. I imagine you're getting a lot of questions these days from friends and relatives about what you're up to again. What are some of the questions that you're hearing from people that you know just about the state of the market right now?
Yeah, there's certainly an interest again. I mean, I think it has always been early days, and it still is early days.
Are they surprised to hear that you're employed still? Is that the vibe?
Less so, but a little bit. So I started investing, early investor in Blockstack, seed investor in Algorand, early investor in Filecoin and Zeppelin. So was really looking more at the protocol part of the space and thinking about how do we make that more scalable, who are the teams working on it. I think all those projects have made a huge amount of improvements, but many of them are still, relatively small. Some are just going live. So I think in the actual technology of the smart contracts, Ethereum 2.0 coming out, Dfinity coming out, what Cosmos has been doing.
Oh, so you're really into the alternative cryptocurrencies, new protocols, huh?
Well, the 2 most exciting for me are still Bitcoin and Ethereum, but I do think that there's a handful of others who are building very impressive technology as well. And I mainly look at that. So I think it's still very early days, but the quality of people, the quality of teams, some of the new projects that are launching, it feels very, very different than 2016 and 2017. And in the 2017, you saw this huge run-up, primarily driven by printing Tether and by ICOs. And
that was in 2017, that's what you think?
Yeah, and so, that run-up wasn't really anything substantial, to be honest, behind it in many ways. I think what you're seeing today in terms of the quality of the smart contract layers, the improvements around Bitcoin and Ethereum, and just the wider adoption of Bitcoin as, a real legitimate store of value. I think it's very different this time around, but I also think that you have to be cautious about any market that has such low traded volumes on a daily basis.
Yeah, a lot to break down there. I guess when I look at the 2017 market, I see that we saw a huge breakout in Ethereum. We saw sort of a divergent asset class where all the Ethereum-based tokens really ran up a value. feel like a lot of that got reinvested into Bitcoin, which might be one of the reasons we saw the market hit the highs that it did. So I guess in your estimation, do you think we were certainly not seeing that now? Would you agree?
Yeah, so I think, a lot of the people who did that, both the Ethereum run-up, but especially many of these ICOs, that money kind of disappeared. I don't think that's what's reinvesting in Bitcoin today. I think primarily what's going on with Bitcoin is you have a lot of these larger crypto funds and venture funds really doubling down. They're attracting a lot of institutional investor indirectly. So I'll give you an example. So for Paradigm, for example, our second largest shareholder, which was started by Fred Urson from Coinbase and Matt Wong, who led crypto at Sequoia, they're bringing into the space people like Yale's Endowment is an LP, Sequoia is an LP, same for Morgan Creek, another investor of ours. They have a couple pension funds. Pantera, another investor and client of ours, has a lot of Wall Street folks. And so I think what you're seeing this time around is indirectly people are coming in through these higher quality funds, and that's being then invested into Bitcoin and certainly supporting the price. And so
right now
see
you
that
don't
thesis, the Bitcoin thesis playing out much more than the last time around. The money coming into the space was all retail, and it was very much being driven by what's the next big thing. And most of those ICO projects didn't have any technology behind them. And so this time you have Bitcoin, and you have a handful of other projects that I think are much better backed from a technical perspective, and creating much more real tech, although very early.
So you mentioned Bitcoin and Ethereum. Do you still see the market? It sounds like you alluded to the institutions see the market really as Bitcoin and everything else. Do you think that's kind of a fair consideration?
I think there's a couple different buckets. So yeah, Bitcoin is by far the largest, and it's the best product market fit right now. I would compare looking at Bitcoin to like Facebook's Series B or something like that, where this company has been around for a while. In this case, decentralized network. It's been through many ups and downs. It's sort of reinvented itself at different times, but it's proven the store of value thesis is pretty robust. And so it's a very interesting risk reward because you still don't have the large asset managers, wealth managers, endowments, and others seeing it. But of course, you have a lot of the early adopter, venture firms, crypto funds seeing it. So I think Bitcoin is closest to product market fit. The second category is all the smart contract systems. So it's not just Ethereum, but it's Dfinity, it's Algorand, it's Blockstack. And there I see a lot of improvements coming at each of those projects. And I think it's really interesting to watch and see what's built on top of it. And then, of course, you have a separate category that's more the privacy coin. Whether you look at Monero or Zcash or Cardano or any of the different ones there. And then finally, I view more like the utility and app layer. And in there, I would roll in things like peer-to-peer payments and what Facebook is trying to do, apps that are being built on top of decentralized systems, a lot of the DeFi going on top of Ethereum. So there are a lot of different categories. But to your question, Bitcoin is the most mature.
I was going to say, aren't we just investing in all those things so we can buy more Bitcoin? I mean, I have to tell everybody at home, but...
Exactly. No, I think a lot of those categories will be breakout on their own. They're just second inning out of, let's say, 7 innings of technology that's needed to achieve real scalability in any of those other categories I mentioned. Most of them are sort of like second inning. But I think it's very encouraging that they've moved in the last year from first inning to second inning. And for the people who really care about the space and how it's going to evolve, I would still pay attention to that while also realizing Bitcoin might be in a 4th inning of where it'll end up.
So just to kind of recap for people who are following, so you think this is real institutional money is being put in the market, and that's why we're at 11,000.
It's not just that. So both go in parallel. Like, it's very hard to separate the two. I'll give you an example. So if you have a lot of retail interest, it will drive, an ETF product. It will drive family offices to put more interest in it. It will drive wealth managers. And so it's all very, very linked because retail, high net worth individuals pushes family office pushes wealth managers. Wealth managers
like a water cycle there.
It's both are kind of having to come up with each other. I think in 2017 you saw almost all retail and almost no institutional come up together. I think this is actually a much more balanced run because it's still primarily retail driven. Our internal estimates is 80% plus of the market is still retail.
Oh, so really? Okay. What do you use to get that calculation? I'm really curious.
Yeah, so we do a lot of kind of looking at day-to-day volumes on each exchange that we integrate with.
How many exchanges total?
Yeah, so right now we have 7 exchanges actually, and then 2 market makers.
So you get to see all their kind of trade volumes?
We see all their trade volumes, yeah, but we don't see necessarily who's trading. So a lot of this is conversation-based, talking to the exchanges, talking to investors, and we sort of put that data together and then take a view on things. But I would say the way we categorize institution is a little bit different. Like we put crypto funds in there, we put index funds in there, we put high net worth family offices, and so it's a very blurry line. But I think it's very fair to say that the vast majority of volume volume remains retail-oriented. But we are seeing this time around it being a bit more balanced. And so for us, at least, obviously, we're all institutional. We're all sophisticated investors, so anyone who's accredited. But we are seeing that this time it's kind of a balance, both sides. The big caveat, though, is volumes here. So you still are seeing pretty limited volumes on this rally. And so I think for something to be seen as sustainable, you need, both obviously a direction, but then you also need larger volumes. This is still a case of someone with $100 million can move a market.
Sure.
And so I'd just be very careful and hesitant to say that we are in a certain phase of the market, because right now a limited number of participants, definitely have the ability to set the tempo. And I think that in order for it to be a much more robust market, you'll have to see Bitcoin adoption from not just, this layer of institutional, but really the larger asset managers and people like that to have it look more like a stock or an FX product.
Let's talk about the Bitcoin price as just a general concept. One of the
Sure.
things I always find fascinating is just how hard it is to describe what the Bitcoin price actually means. I think we're still trying to understand how to value cryptocurrencies as assets that are linked to internet-based networks. When somebody asks what is the Bitcoin price actually, what does this figure actually mean? What do you say to them?
Yeah, I mean, we're a brokerage.
You just say, there's the door, sir.
Yeah, we're a brokerage, so it's as simple as who's buying, who's selling, where are they going to meet on price.
Okay.
And for us, that means different funds.
I just meant
different
you,
index products.
personally, when you're having a conversation, and
Yeah.
someone's hey man, what does the price of Bitcoin mean? What do you?
Yeah,
what do you
I
say?
think a few good benchmarks. One is definitely a percent of the value of gold, for example. So Bitcoin in the very early days was much more around peer-to-peer payment. I think that has sort of evolved to certainly be more of a store of value thesis. And maybe there's an iteration of Bitcoin, maybe there's another token, maybe it's dollar-backed, maybe it's something else. But as a payment system, you have seen increasingly more people use Bitcoin, but it certainly hasn't fulfilled the thesis of payment adoption that a lot of people at the very beginning wanted.
Good thing you're linked here on Twitter with these comments. It's interesting to see.
Exactly. So it hasn't fulfilled that, but it certainly has fulfilled sort of, I think, store of value. It started fulfilling store of value. It was more techie. It was more libertarian. It was more you can't sort of manipulate this with quantitative easing. But I think it's grown even further from that. And so I think thinking about it as a percent of gold is one way to think about it, but it's also a completely different market.
So the price of Bitcoin is just a percentage of gold.
I think that's one way to think about the adoption of it. I'll give you an example. Let's say you thought there's a 5% chance that it's a better store of value than gold. You can do the expected value of all the gold in the world times 5%, and that would be what Bitcoin should be priced at if you think there's a 5% chance. Now, that's really remedial because it could be a much more effective store of value than gold. It's easier to transport.
How are you even having that conversation about gold? Do people ask you that afterwards? I don't know, because I feel like you can either introduce Bitcoin as technology, right? It is a technology, it is a software.
Absolutely.
But we seem to be introducing people to Bitcoin as a gold alternative. I don't know, why are you convinced that that's even the right way to look at it?
Because it is a technology innovation on store of value currently. It is also a technology innovation on payment, even though that use case has been less proven. The technology store of, as an alternative as store of value, you're saying, well, what are you disrupting? What are you displacing? And I think it's people holding dollar assets and euro assets for long periods of time that might not be investing in it, but are just stashing it somewhere. I think it's replacing people who are investing in gold and other commodities kind of as a store of value. And the technology innovation is it's a limited amount, it's easy to transport, it's decentralized, so there's not one party who can kind of take it away. And so that is the technology innovation that Bitcoin is playing out the most today. There's other technology
So you think it's a
innovations.
reflection of that thesis?
Yep.
Right? But most people, I don't think, understand that thesis.
Oh, well, I mean, a lot of people are very interested in the price going up or down.
Right, yeah.
Especially on the retail side, sure, the thesis is that I will make money next month.
Right.
I think our clients are a little bit different. So there are people who have been in the space from very early on who understand both the technology behind Bitcoin, but also the use case, why it's important in a world of quantitative easing, why it's important in a world of, wanting to have more uncorrelated assets as asset classes get more correlated. So, we deal with funds and venture firms and more sophisticated investors who definitely are creating these theses. And then we also deal with people who are just looking at the quantitative part. So we have an API integration, we have an advanced trader product. So we have also people trading off things like moving averages and sort of looking at leading and key indicators and are trading off that. But they want tools to get the best price. We ultimately don't care what your thesis is.
Sure.
We think that we're the best way to either buy Bitcoin or sell Bitcoin or other digital assets because we act as an agency brokerage. So we smart route wherever the price is best, unlike somebody who's trading on principal or unlike an OTC desk. And after every trade, we give you a post-trade report, show you exactly how we did it, what were the fees. So this level of transparency and best execution has just not existed in the space. And so that's why why we started this company a year and a half ago was because so many of the folks we'd worked with in the crypto industry were asking for a tool like this. So we jumped in, Jennifer, who was at Union Square Ventures, myself, and Greg, who sold his last company and was the global head of electronic trading at Goldman, and had seen this play out in equities and FX and realized that anyone more sophisticated will need a tool like Tagomi to place larger trades.
Well, you've certainly woken up the XRP people with your comments in our thread. So I want to go back to maybe your personal experience a little bit. How many boom bust cycles in crypto have you been in, and what is your relationship now? How do you view that cycle now?
Yeah, I think that, again, it's always these low volumes is the issue. So anytime you have a wave of people that are excited, it will really drastically move the price. And so as long as you have an ecosystem that's low volumes, any kind of emotional energy about excitement or disappointment will have these wild swings. And so I think it's very, very important for this space to have more liquidity, to have more volumes, to have more professional traders. That will allow for a much more smooth sort of cycle. But you've seen this in many different asset classes, and I think in some ways what Tagomi is building is trying to address this.
Let's talk about sophisticated things, futures. I think just recently LedgerX just got approved to settle futures in Bitcoin, physically settled. Obviously, there's long and shorts going on in the market right now. Do you guys track data on that? Are you seeing more or less than that? Do you think that 11,000, maybe you'll see institutions try to flip the script here and depress this rally? What are your thoughts on that?
Yeah, so I don't think there's been there's not a very neat narrative. So there's a lot of different news cycles. So one thing people really don't understand is that there are different news cycles in different parts of the world. So a lot of times
within crypto.
Within crypto, yeah. So you'll see a news cycle in the US about how some regulator went after an exchange or something else, and you'll wonder, why isn't this moving the price? Or such and such asset manager is doing a working group on crypto. And then you'll see...
I actually never wonder why that's not moving the price.
So you always see these news stories in the US, and sometimes it doesn't move the price, and that's because, look, it's really low volumes, and actually many of those volumes, maybe in that given week or day, are in Asia at that point. And so you'll see something else, like a miner say that they're standing behind BTC, and then you see all these prices go up. So it's actually really interesting. Because of the low volumes, because how diversely spread sort of the trading is globally, the price movement, it really depends on who are the individual players, what are they doing, why are they doing it, in which jurisdiction, in which geography. And so there isn't a very clean narrative. I think this last rally has had a lot of sub-narratives kind of trend in the same direction. So you had a little bit more of the institutional folks through crypto funds placing more trades in the space. You saw retail excitement of some original people come back. You've seen, obviously, large corporations.
People? Sorry?
Yeah, you've had a lot of people kind of been more dormant who are now trading again and buying again, which is interesting. So maybe they had in their mind 5,000 as a price or 3,500, but a lot of folks who've been in the space in a while double down, over the last 6 months as well. But it's all these mini narratives and micro narratives that have been moving the price. And again, because the volumes are so low, if some of these micro narratives shift, it can very easily go back down. And so I think the important thing to stay focused on is, what is the adoption around Bitcoin? What is the adoption around smart contracts? How is the technology changing? And those are the things, that really, in my mind, the only things you can use to sort of be long or short on something. And then, of course, you have this whole quantitative crowd who uses a different set of metrics that we've built a lot of tools around. They require probably a big black screen
quantitative,
here.
You mean like realized cap or market cap and some of these other things?
Yeah, well, the quantitative folks are looking at the most basic level things like moving averages, how are volumes changing. They devise their own algos, their own sort of buy and sell signals, and they're moving in the market much faster, sometimes intraday, sometimes a few days. But they're really looking at more quant metrics. So it's a different sort of group of traders, and we actually have a special product for them, an advanced trading product, and an API for people who are trading more programmatically.
So you mentioned the accumulation of narratives. One thing that was really active earlier this year was fear about Tether, about exchange inconsistencies, just volumes being very disparate around the world. I guess, what are you seeing about data in the market? Has the data improved with this price rally, or are we still kind of in the Stone Ages?
Yeah, there's a lot of projects who are working on data who probably could be up here and talk about it much more intelligently than me. Think like Delphi Digital and Sari and folks like that. In terms of all the discrepancies, one, I do think that there's less ARB opportunities than there was in the last rally between different exchanges. And so I do think that you have more professional market makers bringing down spreads. You do have more liquidity in the market. You have less ARB. So is it a more mature market than last rally? The answer definitely is yes. In terms of understanding the market and being able to see data, I think there's some really good teams working on that. But kind of to your point, it is still a little bit opaque. And now you're starting to see maybe exchanges will have to interact with each other and share data. You're
With
seeing
the FAFTA.
exactly. You're seeing maybe regulators
FAFT?
want.
I don't know how you pronounce that.
Yeah, exactly.
FATF maybe?
I think it's just FAFT. But so I think a lot of this is just maturity of market. So our biggest point around maturity of market is, in the 90s, both stocks and in 2000 and FX, they were dealer markets. So there are people who would buy and then resell to you. What we're doing at Tagomi is being an agency broker. So we're basically saying you place a trade with us and we automatically smart route to wherever the best pricing is. And we also do the settlement and clearing afterwards. And so we're just building these tools that make the market more sophisticated. And that's the way that equities went, that FX went, and we think crypto will go the same way. It'll be electronic, not voice. It'll be agency, not trading off your own balance sheet, not principal. And it will use advanced tools like the ones we're creating. And we're hoping that that sort of a system will make larger asset managers and other folks who buy these theses be able to execute and trade. And today we're manifesting that through the more advanced crypto funds who are using us.
How much are you saving these people? Do you have an estimate ballpark figure?
Yeah.
So if I'm placing $1 million trade, how much am I saving on you versus just spot?
Yeah,
somewhere?
exactly. So, we do a lot of data benchmarking on that, and we share it with our clients, and then we also have them test it out. So, the clients we've been getting used to use OTC, they used to go directly to exchange, and now, these large crypto funds like the ones I mentioned use Tagomi. We believe on any trade greater than 250K, you save money using Tagomi rather than one liquidity source. For $1 million trade, you could be saving 30 to 50 basis points. For a $3 or $5 million trade, it's even more than that. It goes above 100 basis points. And so, in every other asset class, when you're placing a large trade, you use smart routing, you use multiple liquidity sources, you do it in an agency way. And Greg obviously helped pioneer that, 13 years running Goldman's electronic trading desk. We're taking a lot of that same technology. Much of our team is from Citadel or Two Sigma. We have a Chicago engineering office. We're basically taking the best practices that you've already seen in equities and FX and bringing it to crypto. And of course, it saves you money. Because it's much more effective at actually placing trades than one liquidity source where you can eat through an order book, or using an OTC desk or someone trading principal where they have to support their sales team and there's markups and things like that. So this is just a better way to trade in size.
So I guess maybe taking a little bit more macro, what was your estimation of where the price and market was going to go this year? And I guess you can lie about this because there's no way for me to check this. So you can say that it was $11,000. But what was your prediction coming into the year? And start there.
Yeah, I honestly had no estimation because there were two narratives starting at 3,500. One was certainly there was just a lot less interest. And you could have seen a lot of these larger crypto funds not been able to raise capital. You could have seen a lot of these index products run out of money. You could have seen retail pack their bags and go home and look at cannabis stocks or whatever.
There were a few tweets about that.
Right? That is the next thing. So everyone could have packed up. I think you definitely saw some doubling down from certain crypto funds that were very effective at fundraising, really knew what they were doing, and had been in the space a while. You also saw some people who were early into the market decide to double down and put more money into it. And so it ended up that helped spark, obviously, then more retail interest, and it's a very self-fulfilling prophecy because store of value is obviously something where, sure, there's a technology part.
But you guys are a startup, right?
Huge belief part.
You guys are a startup, right? You raised money, right? So did you think that you thought that this was you were gonna outlast with your runway, or?
Yeah, so we raised $15 million led by Peter Thiel's Founders Fund in January 2018, kind of in the midst of the worst prices. In February of 2019, Paradigm led our second round.
Okay.
And so, obviously, and a lot of great folks participated there. Like I mentioned, Pantera, Multicoin, Morgan Creek, CoVentures, Galaxy. So, look, those sort of people have been in the space a while. They've seen the ups and downs. They are in this for the long run. They are looking for better tools. And kind of in that situation, we raised a second round of funding at a higher valuation.
So, but obviously, you guys gain more users when the price goes up, right?
Yeah, well, we definitely gain more users, more interest, more people onboarding. But at the same time, this is a very effective way to sell too. So if you get margin called, for example, and you need to sell $20 million of Bitcoin, you don't want to do that through one exchange either. So the illiquidity costs of either buying or selling, the product works for both. And so we're a brokerage in that we help people execute. We have integrated custody. We are launching with some of our largest clients and investors a lend short program as well to be able to lend out your Bitcoin. That's something we're seeing increasingly people ask for.
That was a very hot market.
And then, of course, on the other side of that is shorting. We have investors like Multicoin who really pioneered a lot of that space. And so we're building out the full brokerage service. And we think that, in any market, that's very valuable to people who are trading on either side.
So you thought at the beginning of the year that the market was going to...
I thought it was. I had no view. I thought it could go either way. It was
You had just no personal opinion on this. When somebody asked you, you were just like, "That's it." I give you my personal
I was definitely
opinion,
encouraging people to onboard to Tagomi and to trade digital assets, so you can kind of guess where I thought things might go.
I could give you my. So I would have thought that we would have stayed in a range probably between 4 and 10, but I didn't really see that we would get higher than that. Some of that was based on looking at past market cycles and just thinking that maybe we would go through a really terrible long stretch like in 2016.
Right.
Where there was things were improving, but there wasn't such a huge interest. This kind of took me by surprise. What was your reaction?
It definitely did, but there are two things at play here. There's low volumes and there's psychology. And so in low volume markets, it is if you had a lot of liquidity and a lot of trading volume.
Put that so low volume. What's it at today, and what's the highest we've seen? And
so the Bitwise team, a great partner of ours, has done a lot of great work on this, which says, look, 5 billion and 10 billion is a made-up number in terms of actual volume of Bitcoin. It's closer to 200 million and 500 million sort of USD to BTC. I think they're correct, and we see that internally across the exchanges and across the partners we trade with. So that's very low volume to be trading. So you can see how a $100 million trade can end up having an impact.
Right.
Now that's changing. So you have market makers creating liquidity. You have larger funds moving into the space, and so it's becoming less manipulation, but it's still very low volumes in general. So when you have low volumes, you can have a group of people, a group of micronarratives move the price. And then the second thing is psychology. So because, of course, it's the store of value thesis, you definitely see people saying, oh, okay, I'm back in the black now because the price has gone up, so I'm going to double down. Or you have people who say, it's about to hit 10,000, I want to go with the momentum. You have all the quant folks who are trading also off of these indicators. So they all kind of multiply themselves out. These narratives, folks trading quant, people doubling down, the low volumes, and creates what we have today. The flip side of it is you have to be really careful because it's really low volumes and momentum towards the downside could certainly be self-fulfilling as well in the same way. So for me, what's most helpful is I focus on building the best tools for people no matter which way. And the reason I do that is because I have complete conviction that the space will survive and that the space will be successful. And I do think it'll be more than Bitcoin. I think there are other categories we talked about as well. So I have a very bullish outlook on the industry, where it's going the next 10 years, who's building projects, the people who will come into the space, and I think they will need the best set of tools, and that's what Tagomi's really focused on.
I guess I want to talk about the halving, because that kind of fits into forward-looking narratives. Is that something that you think is going to drive interest to your product and to the market in general, or are we seeing this is that interest?
Yeah, so again, interest to our product has really come from just how sophisticated are you? So if you've never been a trader before,
so those people know that the halving is coming up.
I think price definitely helps, but our product, it's really about how sophisticated you are. So almost everyone who's starting a crypto fund out of Wall Street, who's traded FX, traded equities, looks at the market and says, I'm onboarding to Tagomi. Most of the more sophisticated crypto funds that are actually placing $10 million plus trades over periods of time are on Tagomi. Half of them have maybe invested in us out of the top 10 by size. And so if you use Tagomi or not has very little to do with the price or halving or anything else. It's do you want to get the best price? Do you know what best execution is? Do you understand how our settlement and clearing functionality, our smart routing, our algos all save you time and money? And people from Wall Street or more sophisticated investors or people who've just actually placed big trades know that and have been onboarding with us. So we're super excited about that. In terms of pricing and halving, I think definitely that was a factor, and it will be a factor. It's very simple supply-demand math, and maybe people are thinking about that. Maybe they're not. There are just so many tiny micro narratives in this space that people ask, oh, is it because these two big asset managers are coming in? Or is it because an ETF is about to be approved? Or is it because this miner is profitable again? Or Binance released this? And I tell them there are just so many micro narratives that come into play, and you see people trading on all kinds of different indicators or thesis that there is not a coherent mover of price in the space, and it just varies day to day. And it's not a great answer, but I think it's the real one.
So you don't like micro narratives?
Well, it's a bunch of micro narratives combining to move the price.
Right.
In a very low traded volume market.
So I guess where's and your macro narrative is still Bitcoin is a store of value.
Correct.
And then everything else is doing question mark. What is
my other macro narratives are smart contract systems are getting better and more scalable. And I point to projects, including Ethereum, but also Dfinity and Algorand and Blockstack and others who have been growing their teams, have been growing their tech products, have been doing new releases, have been building communities. And so those smart contract systems, I'm very bullish on in the long run, and I think they all have tokens associated with them for governance. And so, there's a whole group of assets there. And then another group, like I mentioned, is more for payments and utility. So, you could either buy the Ripple crowd's belief or others in terms of what the payment systems will be there. You could say it's going to be more centralized.
But what's the macro narrative for all that? Is that what is just so the cryptocurrencies are moving throughout finance, and we're going to see all these existing types of finance become crypto-ified.
Finance and legal. So I think it goes to what is a smart contract? What's the innovation there? So there's certainly a financial innovation, but there's a legal one too, when you have different people on
ownership of the cryptographic keys.
Exactly. So I think that it's really a big question of if this space is going to disrupt finance and legal in the next 10 years, it will be a very, very big industry. The token set can't be removed from that. It's either a store of value, it's a governance mechanism, it's a utility mechanism, it represents an asset. Any of those things you need tokens for. So if you think that legal and financial systems will change in the next 10 years around decentralized technology, then there are going to be different assets you're excited about in the space. Tagomi as a brokerage supports a lot of those different assets. So we don't really take a view on which one's better than the other. We obviously take a legal and regulatory view on what we offer where, but we do not take a real view on what you should be long, what you should be short, where the price is going. We do believe you should buy it at the best price and should have best execution, and it should be electronic, should be high tech, should be agency based where we're doing it in your interest.
This is kind of a loaded question. So when you imagine this future,
yeah,
I like the answers to this question when I ask it. What is an example of something that exists in that environment? Do you draw an example where you say, okay, we have Twitter now because we have the internet. What are the things that you say to people will exist because this technology exists?
Yeah, I think people will be able to make contracts without using a lawyer or a bank. So a farmer could, and an insurance company could make a contract based on the amount of rainfall that will happen, and they could get paid out without a centralized authority paying them out.
But that's just something that happens today already that you're putting on crypto. What's something that doesn't exist today?
That I think is really, really hard to answer. It's like asking people early in the internet, whatever, in the 80s, what's an example? And then, they describe to you Airbnb or Uber.
Well, there'd be diners on the road of the internet superhighway. It would have its own diners, right? And gas stations.
Maybe. I don't think any of the people working on the protocols of the internet had any idea what it would really be used for besides for communication between different counterparties. And here it's very similar. There's going to be communication but financial arrangements between different counterparties. With the internet, it was more, there'll be some sort of messaging or information communication. Here, there'll be some sort of financial communication. Can you build off that and describe all the different things that will enable? I think you'll have interesting predictive markets. I think it'll be used in gaming. I think that, obviously store of value is the most obvious one as an alternative to gold or money. But at the end of the day, this decentralized software will eat finance and legal. And the way that looks is very, very hard for me to. I'm not that creative. I do know people want better pricing, lower fees, so that's why I started Tagomi and not a decentralized protocol.
One of the ones that I've been using, I'll just try it on the size too. I talk about the mortgage crisis in Decentraland. Again, not a real thing if you own Decentraland, but I guess I try to get people to imagine that this virtual community that is super micro-sized could have sophisticated financial products to the level where they would actually have a problem that is more akin to what someone would relate to a real economy.
Yeah.
I don't know if you'd find that one interesting, but
maybe. I honestly, so I used to be a little bit more in the predictive world in venture, placing these bets.
Right.
Now I'm just kind of in the execution world of better pricing and placing better trades.
So as you look at 2019, the rest of the way, I know you're macro focused, but which narratives do you see coming to play in the next 6 months? Maybe just give me your take.
Yeah, so I think a few micro narratives. One is the ETF product.
So you're bullish on the ETF?
I think in the next 12 months, there will be more exchange-traded products globally. So I'm not going to limit that to US, I'm not going to limit it to ETF versus ETN, but I think in the next year, in the next 12 months, you will see products globally in places like Europe, Asia, and maybe the US that are exchange-traded products. That's interesting because even though that's retail-driven, maybe you need an authorized participant, you need agency brokerages, you need folks like that to really support them. So it will also bring in institutions like ours who will have to help be the back end for a lot of those products. So I think that's one. I think a second is you will see larger asset managers be interested in the space. So you already see certain ones, announcing their plans, going live certain times, but I think you will see mutual funds and other true asset managers get in the space beyond what's more institutional today, which is more the crypto fund. So we're very excited about that. And I think you will see kind of a little bit more scrutiny around some of the altcoins that don't have real technology versus now some projects coming to market with very real technology, but questions around can they build the community? That's you've seen projects with only no technology build great communities, and then you've seen other projects,
For sure.
with great technology just come now to market, and it's very questionable. Will they build the community to?
Which one are you more bullish on? Because I find this interesting. I talked to Justin Sun at Consensus. I did the one-on-one with him, and I find him to be like a fantastic marketer. I mean, if nothing else, that is certainly something that he excels at. Whereas a lot of the projects you mentioned, techie folks really like them.
True.
But there's not really that.
Yeah, and you need both. You absolutely need both, I think, at least right now. So I think it will be a question mark of who can bring the two together best. And, we have a lot of investors who are very pro-Ethereum. We have some who are very negative Ethereum. But I will give Ethereum credit for it's a project that has been very interesting from a technology standpoint, the people building on it, the community, and has done a pretty good job also sort of marketing, having a face of the brand, having people build on top of Ethereum. Right. So it's an interesting asset that it's been able to balance both. I think you'll need a lot more to do it, folks to do that in all these different categories I mentioned, and privacy coins, in the utility layer of things and such. And in Bitcoin is another great example. It's simple tech, but it's very, very great tech, and it's a huge innovation, and it built an amazing community at the same time. So I think this space is interesting, not too dissimilar to the internet, where you need real technology, but then you also need real applications and communities using those applications.
Mark, appreciate the time.
Yeah.
Thanks for the overview. And once
Sure.
again, we'll be back in a bit on CoinDesk Live. You can ask us questions on YouTube and on, what was the other one? Periscope? Twitch, there you go. Try to keep them related to the subject, though. No offense to the Bitcoin SV/XRP people. Mark, appreciate you coming on.
Thanks.
Thank you.
Appreciate it.